A company sells £4 billion worth of stuff in the UK in a single year. £4 billion. And the tax they pay on all that? Only £2.5 million. That's a tax rate so small, it's basically a rounding error. You, on your salary, almost certainly pay a higher percentage of tax than one of the biggest companies on earth. And here's the part that'll really get you. It's completely legal. No dodgy offshore briefcases, no shredded documents, just a strategy so clever and so cheeky that it has an actual name. They call it the double Irish with a Dutch sandwich. I'm not even making it up. Today, I'm going to show you exactly how the biggest companies in the world make billions in profit and pay almost nothing, step by step in plain English. And by the end of it, you'll never look at your own tax bill the same way again. Welcome to the secret economics of everyday things. So let's start with the thing they're trying to avoid, tax on profit. Simple version, a company makes money in a country, the country taxes the profit, makes 100 million in Britain, you owe the British taxman a chunk of it. Fair enough. Now, big companies really don't want to pay that, not because they can't, because every pound they hand over is a pound they keep. So they hire the cleverest accountants and lawyers on the planet to find a way to make their profits magically disappear from countries where they actually earned them. And they found one. It's genuinely brilliant. It relies on one simple, sneaky idea that changes everything. Here it is. So the trick is this. You don't move the shop, you move the profit. Let me explain, because once you see it, you can't unsee it. Imagine a big coffee chain in the UK. It's got thousands of shops, millions of customers, tons of money coming in. Yeah, you know who I'm talking about. On paper, it should be making a fortune and paying a fortune in tax. But somehow, year after year, the UK business reports barely any profit at all. How's this? Because of something called transfer pricing. The coffee company sets up another version of itself in a country with tiny taxes, say a little subsidiary abroad. And then it decides that this subsidiary owns all the valuable stuff like the brand, the logo, the secret recipes, the name above the door. And now the UK shops have to pay the foreign subsidiary for permission to use the brand. Huge fees like royalties, licensing costs. The British business sends a massive chunk of its money abroad as a payment to, essentially, itself, to another part of the same company sitting in a low tax country. And just like that, the profit that was sitting in England, about to be taxed at the full rate, has been vacuumed out and parked somewhere it barely gets taxed at all. The shop's still there, customers are still there, the money though is gone. Drop a comment down below. Does this make you angry, slightly impressed about their dealings? Because honestly, I'm a bit of both. Okay, so where does the ridiculous name come from, double Irish with a Dutch sandwich? Because the absolute masters of this took it to another level. They'd route the money through not one, but two companies in Ireland. That's your double Irish. And then slip a company in the Netherlands in between them. That's the Dutch slice in the middle. The Dutch sandwich. Each layer legally shaves off more tax as the money passes through until it finally lands in a proper tax haven, somewhere like Bermuda, where the tax rate on companies' profit is zero, a big fat zero. So the money takes a little world tour, earned in Britain, bounced through Ireland, slipped through the Netherlands, parked in Bermuda. And at the end of the journey, a company that made billions has legally turned its tax bill into pocket change. And I know this sounds abstract, so let me hit you with the real numbers because they are genuinely absurd. That coffee chain in the Netherlands, it once paid tax of about €2.5 million on profits of over 400 million. That's a tax rate of under 1%. The giant online retailer, its UK arms, paid around 2.5 million in tax on about 4.2 billion in sales by routing everything through Luxembourg. One of the biggest tech companies on earth moved nearly 16 billion euros in Bermuda in a single year, saving itself billions in tax. Another used the trick on around $110 billion of overseas profits, paying an effective rate of about 2%. 2%. Have a think about what percentage of your wages disappear in tax before you ever see them. I bet it's a lot more than 2%. The bloke stacking the shelves is paying a higher tax rate than a company he works for. Now, if your jaw's on the floor right now, if this is the first time anyone's actually explained this to you properly, do me a favour, please hit like. It genuinely helps this reach more people who deserve to know how this works. And subscribe, because every week I pull back the curtain on something that powerful would rather you didn't understand. Now, the big question, if they're dodging billions in tax, why isn't anyone in prison? Here's the crucial thing, and it's the whole point. There are two words that sound the same but mean everything: tax evasion and tax avoidance. Evasion is illegal. That's hiding money, lying, breaking the law. That gets you locked up. But avoidance is legal. It's using the rules, the actual official rules, to pay as little as the law allows. And everything I've just described was avoidance. They didn't break the rules. They just found the gaps in them and drove a lorry full of money straight through. Which raises the really uncomfortable question: if it's legal, who made the rules? Because these loopholes didn't appear by accident. They exist because the tax laws of entire countries were complicated enough and friendly enough to allow it. And the companies using them employ armies of lobbyists to keep it that way. The good news, and it is good news, is that the world has started to close these gaps. The double Irish was shut to new companies back in 2015, and recently over 100 countries agreed a new global minimum tax to stop this race to the bottom. The party isn't fully over, but the lights have come on and everyone's seeing what's going on in the dark. So, the next time you hear that a company made record profits and paid barely any tax, you won't be confused anymore. You'll know exactly how the magic trick works. Move the profit, not the business. Make yourself pay yourself, and somewhere the taxman can't reach. A shop in Britain, a brand in Ireland, and the money sunning itself in Bermuda. It's the same lesson this whole channel keeps landing on. The way the world actually works, it's almost never the way it looks from the outside. You just have to know where to look. Now you do. And here's my question to you. Be honest in the comments. Is this clever business, or is it daylight robbery? Genius or a disgrace? I want to hear it. See you in the next one.